Hey guys, welcome back to the channel. Today I'm going to be talking about an extremely important support level for Cardano that absolutely must hold. So if you're new to the channel and you want to show some support, please leave a like and subscribe. So this extremely important level is around roughly 41 cents. If I go all the way back to this 2018 high, we can see how we had pretty strong resistance in May at this level. And the reason this is so important is because we had this dead cat bounce up to this level, and this was a level we rejected and then continued this bear market. We can also see how following this consolidation phase directly under this level in January and February of 2021, when we broke out above this level, the following 25 days or so, we pumped around 280%. So it was an extremely key breakout from this level, and currently we're holding it as support. So if I zoom in here to today's price action, we can see how we are holding it as support. We had this wick all the way down to this level at 41 cents, and then this second lower wick just a little bit above it. So we are holding it as support in the short term, which is a positive sign. Ideally for Cardano, what we would like to see is some continuation and a reversal back up to maybe targeting this high on the May 31st. If we're able to do that, then it would kind of form this double bottom pattern, and we would have a definitive and more confident view that this has held as support. And then maybe then we could start targeting this red moving average, which is the 200-day simple moving average. If we go back to June of 2021, we can see how there was a very key retest of the 200-day simple moving average, which held as support. So we experienced a strong bounce off of it, and then we briefly broke below it, but we had sort of this spring out of it. So that was another bullish sign because we had a failed breakdown. And if I scroll all the way back, we can see how time and time again we have held this moving average as support. So historically, price action has interacted with this level, and there's a lot of confluence with some other areas. What we want to see is a retest of this and holding it as support, breaking above it so that we're no longer going to hold it as resistance. We have not tested this moving average in approximately 220 days. And you can see how just before we broke it, we had some consolidation above it. We tried to hold this moving average, but ultimately we fell and broke below it. So what we want to see is a hold of this support level at 41 cents, a move back above and testing this moving average, and then maybe then can we reclaim it and start holding it as support. Because the good thing about holding it as support is we can experience some pretty decent bounces off of it. So from this wick to the following few days, we bounced about 30%. If we continue on, we can see from this candle we had a 40% bounce over the following week. And then if we continue on, we can see how this one was a 30% bounce over the following 2 days. So time and time again, we've seen how we had some pretty extreme bounces off of this level, holding as support in the event of some sort of short-term correction. So that is the beauty of holding this as support and being above it. We can experience some pretty large bounces off of it, and that can take us back up to kind of pre-correction levels. So that's kind of what I'm looking out for. However, if this 41-cent level does not hold as support, or maybe we come back up to this red moving average, we reject sharply off of it, and then come back down. Either way, if we are losing this level at 41 cents, my next target for price action is this zone between 17 and 18 cents. So if I outline this, we can see how, there's some pretty important price action around this level, and specifically this July 2018 high. Right, so we can see how we had this second lower high. So this was the first lower high at 41 cents. We came down and then we made this new local low at 11 cents. So we had a pretty strong bounce, about 75% off this low into this new high, which formed as resistance. And then we had more resistance in July of 2020. We saw that following a retest of this level, we dropped about 55%. So this was strong resistance again. And then we held resistance for a few weeks here in sort of the later stages of 2020. And following the breakout of this level, that led us to the next 41 cent area. So there's not really a whole lot of price action between this key support at 17 and 18 cents and then this local support at 41 cents. So if we're starting to lose this area, I would expect a move back down to this eventually, and just some sort of continuation of this longer term downtrend, right? So it just kind of this trend where we're forming these lower lows, lower highs, and continuing this macro downtrend. The only reason I would expect this macro downtrend to end is if we have some definitive evidence that we're starting to break the structure. And again, that would look something like holding this 41 cent area as support, bouncing up, reclaiming some of these lower highs, and maybe targeting this 200-day simple moving average. So that's my analysis on Cardano. That is the very key levels that you need to be watching out for, and this 41 cent level that you absolutely need to see hold as support. I hope you guys did enjoy, and as always, I will see you in the next one.